Welcome to the Sazmining Podcast. At Sazmining, we are bringing you into conversations with today's industry leaders in blockchain and cryptocurrency. Our goal with this podcast is to improve the understanding and adoption of blockchain and cryptocurrency by giving you an insider's look at what's being built and informed predictions on what the future holds. Yael Tamar is the CMO and Partner at SolidBlock, a new fundraising vehicle offering a compliant global platform for the issuance and trade of digital securities backed by real estate and other assets. Yael is a financial strategist, speaker, advisor, and mentor with over a decade of experience, as well as a regional co-chair at the Foundation for International Blockchain Real Estate Expertise. Welcome to the podcast, Yael.
Thanks, William. Thank you for having me.
Of course. I've been really excited for this conversation. All the stuff that you guys have been doing with SolidBlock is incredible.
Thank you.
Yeah. Can you talk a little bit about just the journey of what starting SolidBlock was actually like and then moving forward to where it is today?
Sure. So SolidBlock started in 2018 when we had an era of kind of this industry that gave a lot of hope and failed. And I'm talking about the ICOs. Everybody thought this was the way that companies are going to raise money. And this was the way that, anybody with a dream and a community could monetize the community and create something really cool. So unfortunately, there was no delivery, no execution, and lack of planning for the time when regulators are going to get a gist of what's happening. So at that time, we understood that we need to work with the industry, with the regulators, with the financial institutions, and really solve a real need, right? And utilize, blockchain is going to be utilized for raising funds. It's going to be through compliant channels and the security. However, companies that are not able to raise funds through traditional methods of VCs or, private equity and so on and so forth, are probably not going to be able to use funds in any way, So we have to think about assets that are really struggling and are highly liquid, that are easy to evaluate and are easy to really appraise and understand. And these assets are real estate, commodities, energy, anything that relates to, let's say, like a real world asset. So that's basically us leading, our background leading up to understanding the potential and listing it on our LinkedIn profile, right? My co-founder Yuval, he basically got into the STOs in 2018, and lo and behold, he got a contact from the Aspen St. Regis Hotel, which was tokenizing in 2018, and this deal closed fairly quickly. And SolidBlock was creating a tech platform for that deal. And I'll explain in detail a little bit about that deal. Now, very quickly about our personal backgrounds. Both Yuval and I have been dreaming of being investors, specifically real estate investors, for many years. I have a finance background. I've been helping other people invest money with private equity, kinds of accelerators, startups, pension funds, IPOs, I worked on a lot of different financial products, and yet wasn't able to reach real estate deals, having, all these challenges in becoming an investor. Same for my partner, Yuval, who's been in IT, but, has always been interested in finance. So we kind of went on solving our personal challenge there with real estate. And after we've done the Aspen deal, which raised $18 million on our platform, and for the renovation of the property, and issued the first security token for a commercial asset, we went on to develop the platform and do several more projects and kind of create this new platform that's going to be a bridge and a window into DeFi, decentralized finance, and a new wave of digital structured products.
Yeah, well, congrats with that. And because I do remember that whole, it was almost like what everyone was talking about. Everyone was talking about the possibility of tokenization and how security tokens were going to change the world. And I think that the concept behind security tokens is really transformative when you have an understanding of how illiquid some of these assets really are, and when you understand how this liquidity premium could really change who can invest in what and how fluid that process is. But I know that we'll
Absolutely.
dive into all of that. So maybe to start, could you talk a little bit about tokenization and how that works for security tokens?
Absolutely. Tokenization is a function or a combination of two things, digitization and securitization. So let's start actually with securitization. Securitization is nothing new. Anybody from the financial industry understands that you can take any asset and break it down into parts, right? So you create an SPV, a special purpose vehicle, a corporation, which holds the asset. You break it down to parts and you sell them to investors. So these parts are called securities, and they come in two types, equity or debt. Equity means that you're actually holding a piece of the asset, and debt means that you are lending money to the owner of the asset to improve the business in some way, and then you're going to be paid interest, and then you're going to be paid, the whole bond back at a certain time, right? So that's nothing new. That's been done for many years, right? Decades. Now, what happened to the industry in 2012 was the Jobs Act. The Jobs Act basically said that we can now investors can buy these securities and actually trade them. So accredited investors can who bought securities can trade them on what's called an ATS, automated trading system, which is a special license for a broker dealer, and you don't have to go to an exchange. You don't have to go to a licensed exchange like NASDAQ or New York Stock Exchange, for example. You can find an ATS like T0 and trade your product there. So that's one thing that happened. The second thing that happened around the same time from 2010 was Bitcoin. And Bitcoin is the first cryptocurrency that was on the platform of blockchain, right? So essentially, blockchain is a decentralized ledger technology that enables transfers of assets, right? Assets or information in an immutable, decentralized manner. And that created a revolution. The combination of those things, the Jobs Act of 2012, that enabled us to compliantly trade private products, and the technology that allows you to trade private products, they came together, right, and created tokenization essentially. So, to make a long story short, when we're tokenizing an asset, we're issuing a security, but the security is not a paper security. Your holding in a company when you invest is not sitting in some Excel database, but instead it's sitting on the blockchain. Blockchain provides a cap table, a secure and immutable cap table that basically keeps track of the investors coming in and out of the asset when they're being traded. So that's what tokenization is. And the benefits are obvious. You can manage many more investors, thereby you lower the investment thresholds. When you invest in real estate, usually you need hundreds of thousands of dollars, if not millions, if you want to hold an asset like Aspen, like St. Regis. Nobody could invest in a hotel. No private investors could invest in a hotel of that size until that deal. So that's number one. Number two, liquidity, of course. Nobody was able to trade pieces of hotels yet, and yet last week it was listed on T0, and over 150, 200 people have traded the assets so far. And of course, now you can also do global transactions, right? You're opening the market up to a lot more people.
Yeah, well said. That really summed everything up really well. And comparing utility tokens to security tokens, what you just outlined was how a security token functions.
Right.
Is there anything that you'd want to just speak about regarding the difference between a utility token and a security token?
So utility token really is using a Kickstarter model to raise funds for future products that communities want. that's what it was supposed to be about. And I think that they do have their place. And I personally, as an economist, was super excited about these tokens because it really enables a lot of different models. And I think we're still going to see them in payments and things like, for example, rent payments or anything that motivates users to do certain behaviors, right? If you want your tenants, for example, to somehow use the space in a way you want, right? Save the space or clean the space where they live. You can encourage them with the utility tokens, for example, and then they can use them to buy certain services or convert them to security tokens at some point, right? So they can own the asset. So this is an example of a utility token. And the problem with utility tokens was that they were used for fundraising. They probably should never be used for fundraising for equity companies. They could be successfully used, like I said, in the Kickstarter model, right? Any product that's out there that's being produced, physical product that you're supposed to get at the end of the day in the mail, or that would be a good example of utility token. If you're fundraising utility token with the goal of profiting from that raise, right? Anybody who's investing in it is expecting to benefit from the value increase of utility token. That doesn't pass what's called the Dewey test, and that automatically makes the token a security token. So it's not compliant. So I wouldn't advise anybody to raise money from utility tokens anymore, but I would advise technologists to look into different use cases of utility tokens.
Yeah, definitely. Because that's one of the things that people talk about tokenization. And there is that clear difference when we were seeing that huge boom and bust of the tokens on the ICOs, initial coin offerings in 2017. That was really surrounding exactly what you said, these companies that were having a token represent access to a particular service, but they were using the token as a fundraising vehicle. And that's why the SEC really came in and cracked down.
Yeah, good for them too, good for them too. And also they were right. If you look at all the companies that raised, almost none of them came up with any significant products, right? There's really, you can count on the number of the fingers of my hand, the companies that really created anything. And those were mainly exchanges, and some of them are really successful, or maybe some deep tech platforms. Obviously there's no consumer apps that are still around, and yeah, 99% of these companies don't even have any code on GitHub, which is a platform where companies list their code on open source. So yeah, so they were right, so it was all a scam. But
Yeah,
unfortunately, it's unfortunate. Once you give a loophole to the industry, and it's happened before with many things, blockchain is no exception. Any new technology like the internet is the biggest community of scammers you can find. Obviously, how many emails did you get from a Nigerian prince this month? So it doesn't mean that we shouldn't be using the internet.
Too many.
Yeah.
Yeah, it's also one of those things where, I mean, you brought up the example of the internet. It's not like we're going to not utilize the internet, or we should start banning the internet because there are bad people and scammers that use it. Just how with blockchain, for example, you guys come up with a great use case for blockchain technology. There's value to be seen in that. And then there are certain people that are still talking about it as if we're in like 2012, 2013, and talking about some of the scams that are happening. I think good people are going to build good things and do amazing things with the technology. And then bad people are always going to be bad doing certain things in whatever technology they're able to get their hands on. So,
absolutely. Well, most banks out there, I think probably the majority of the banks now are using blockchain for transfers, right? Especially international transfers. And on the other end, there's people who say, we shouldn't use 5G. So there's all kinds of there are all kinds of people out there. And the good thing is that in business, you always kind of evaluate opportunity against the against many different criteria. And, blockchain is just a technology. It's just a technology that happens to be the best technology for doing any sort of transactions, securely. And the internet, right now is obviously used by everybody and anybody, and you can't think about any applications except maybe NASA or CIA, where maybe they have something else that we don't know about. So I think blockchain is going to be as widespread as the internet in a few years.
Yeah. And I also love the way that you were talking about the potential future of some of these tokens. I mean, you gave the example of utility tokens being used potentially for rent in the future. Is that something that you've seen a company that's working on that, or is that just something that you came up with the idea, just seeing the potential of using blockchain?
I've seen quite a few companies working on that, actually. I don't know which ones have survived, but there are some non-blockchain applications as well that are tackling this issue. And in terms of rent in general, it's super outdated in the US and many other countries where you're still operating with checks, for example, and you can't evict tenants. They don't pay. There's all kinds of protections. So you could use smart contracts and blockchain to really sort that out. I think it's going to take quite a bit of time for consumer applications like that to happen. In some of our projects, we're discussing implementing utility tokens. We're for the rental payment and incentivizing tenants. So you may see that in our projects in the future. We're working with a few projects in the affordable home space. So it's kind of a place that's close to my heart. And I think that's a place where we can make a lot of difference. So I think specifically in those projects, it could be of really good use where, tenants care and they would be, excited to be even a part of something, a shareholder in a space where they live and care about it much more.
Yeah, definitely. And one of the things that I also wanted to dive into depth on surrounding security tokens. We could also run the thought experiment for utility tokens if we want afterwards. But let's say I want to tokenize equity in our company, right? So for example, Sazmining, if we wanted to go about tokenizing equity, how would we go about doing that through SolidBlock? What's the step-by-step process of what that would look like from our end and what you guys would be doing behind the scenes?
So for you to tokenize your company, your equity, we would create an SPV, always create another entity that then will have the right to buy a part of your company. We'd establish the valuation, we'll go to Ernst & Young or some other company that will establish the valuation. And that's why, by the way, it's not easy to do this for companies that are early stage, where evaluation is really unclear. So we would do that, and then we would have to create like what's called a PPM, private placement memorandum. It's a legal document. It's kind of like a white paper, but with a very clear format. And with that PPM, we would notify the SEC we're doing the offering. We would go and register what's called a Reg D 506C exemption offering. And after that, we're able to, you as the issuer are able to go and market this offering in an unlimited way. That's what I talked about with the Jobs Act. You can go out and market, but you can only raise from accredited investors. You can also only market to accredited investors. That's why you usually do that through a broker dealer that has access to accredited investors. And you would, every time you take money, it is your responsibility to check whether these investors are accredited. And I'll go into the definition of accredited investor in a minute. You also have to check KYC and AML of every investor. And because if the SEC goes after you at the end of the day, you have to have everything documented. And that's why I would advise to use third parties to do that. Now, third parties that have KYC, AML accreditation automated and licensed. So we're using North Capital. It's our partner on the compliance side. It's a broker dealer and partner on the compliance side. Now you could use obviously a platform like SolidBlock, so you don't have to create everything from scratch. All the onboarding.
Sounds like a lot if you tried to do it on your own.
Yeah. Also, we have the expertise because we've done this before, and I would not advise somebody to just go and repeat this process. We've done this before with incredible legal teams, with a crazy amount of resources. Think about the Marriott's St. Regis hotel, so we were lucky in that sense that we didn't, that we started with a project of that size. So we were able to learn from the best, right? So compliance and taxation and all of that. So then once you offer it to investors and investors agree to transfer the funds, you would again use a financial institution and escrow agent to hold the funds for you, because you're not able to use these funds until you reach what's called a soft cap. Soft cap is the minimum amount of investment that you need to raise to move forward with this project. And then you have a hard cap, which may be higher than the soft cap. It's what I would like to have. So once you reach the soft cap, you're able to take the money out of the escrow and they distribute the security tokens to investors. And that, obviously the distribution that happens digitally through a platform like SolidBlock, ideally providing a custody for these tokens so that the investors don't have to deal with wallets and stuff like that. So the platform creates a wallet every time an investor is onboarded, and they don't even know that they have a wallet. They don't have to have a key to the wallet. It's secure with a platform. And then within, unfortunately in the US, there is a 1-year lockup between the issuance and the trade. So investors are going to have to wait for 1 year to start trading. At that point, they can trade over the counter on platforms like SolidBlock, or these tokens are likely going to be listed on one of the exchanges like T0, and then they'll be able to trade on the exchange.
And do the tokens, as a company, do you have to pay to get listed on one of these exchanges like T0 or any other type of security token exchange?
Yes, absolutely. You definitely have to be paid to get listed, and then you have, some maintenance fees throughout, or sometimes minimum trading thresholds. I think that the industry is going to improve tremendously, and then you're going to have a lot of players, so it's going to become competitive, and market makers and underwriters. So I expect this industry to blow up, and not as fast as they predicted initially. And I'll tell you why. In 2018 or 2019, the predictions were that there's going to be at least, I think in 2019, maybe $10 billion tokenized, which it wasn't that outrageous. In reality, there were around maybe 1 to 2 billion, right? So they were mistaken by about a tenth, right? So, or times 10. And the reason why, and still wasn't so much, right? The ICO industry was higher, but that's due to like 2 huge projects that brought in 4 billion. So 1 to 2 billion is not so bad for the first year in any case, but really the regulation has just caught up with itself. Like in the US, thankfully we had the regulation ready. In Europe, they just came out with the regulation last year, some clarity of what's legal and what's not. In Europe, also crowdfunding is much more advanced than in the US. In the US, they've had a plan to increase the crowdfunding threshold from 1 million to 5 million for a while. And also now the current SEC commissioner, who I truly admire and love, like she has plans to improve or to change the definition of the accredited investor. And I wanted to touch up on that. So the government basically says that you can only invest in these highly risky securities if you earn a certain amount of income, which is I think $250,000 per individual and maybe $300,000 per family for the past 2 consecutive years, or if you have a certain amount of assets other than your primary residence, and that's a few million. So that's very interesting, because you can also go to a casino and then blow your money there. And you can also go to a P2P lender, and as we know, that's a huge industry, and payday loans and all of that. And that's okay, right? And the minute it comes
That
to
is
like these
crazy when you put
financial,
it like that. That really
I
is.
know,
I never even thought
I
about it
know,
like that, but just stacking them up side by side, that it's so weird that
I
that
know.
law exists.
I know, right? So a lot of people are, who are into conspiracy theories are saying that, okay, so the government's trying to limit us uh, from really getting to the products that the rich are investing in, and we're left with mutual funds and pension funds and other like low performing assets. Um, so in this case, I'm somewhere in the middle. I think that it's still a goal of the government to protect residents and citizens, because I think that in the absence of such a law, we'd see what's happening with the ICOs, right? People taking advantage of somebody. And obviously the SEC or the government doesn't have the capacity to do so much legal work and check, and so much enforcing, right? So that's why they said, okay, go to accredited investors. They're more sophisticated. They can smell, they can smell the projects that they're not going to perform. So what the SEC is trying to do right now, SEC is a Securities Exchange Commission that governs all the compliance regulations. They're trying to update the rule for credit investors. So anybody who passed the test like a Series 7 obviously understands what they're doing in finance, and so now they will be able to invest as accredited investors, and I think that's fantastic because it encourages financial education, and will help us all, and because that's the first thing that people need to do is really get financial education. And that's why it was crazy to me, because I've been working in the finance industry for several decades, and I couldn't invest in these assets. So that's pretty insane, right?
Yeah.
So yeah, because me specifically, I was just blowing all my money on startups and creating things and investing and creating technologies for many years. Um, so that's basically where we stand with with what you would have to do as a company. Now, it would be it would make sense to discuss, whether it makes sense for you guys to do it, because a liquidity premium is fantastic, but being a company, you need to generate sufficient amount of transparency for people to be trading your asset, right? With real estate, you have milestones. You have, renovation finished, a new tenant, and so on and so forth. So we're able to trade. What I like about the mining industry specifically is the equipment and the fact that it's tangible in a way, right? So, and also there's electricity costs, and like, let's say a mining company is starting operations, and then in a specific country, then you have some interesting things happening, and you have really, as far as the valuation is concerned, if your company is dealing with hardware specifically, I think actually tokenization could be a great path for such a company.
Yeah. Well, it caught my attention initially. I started looking into it, but this was back when I would say the infrastructure that was available to a company that was evaluating a security token offering was in its earlier stages. So it just seemed kind of difficult from a token management perspective, and just keeping everything straight. I just thought it would probably be easier to just go through the traditional fundraising route, and then maybe wait a few years and the company would grow, and then the overall space would grow, and then it would be a decision of going IPO or going for potentially a security token offering, something like that.
Right. So the good thing about the security token space is that you don't have heavy reporting requirement like you do with the IPO. You really have to report to your investors on, the usual financial reports, audited financial reports. From our companies, from our clients, we're asking for a quarterly report on evaluating all of your assets. And then you also update your investors on like a daily or weekly basis, whatever you want, like if anything special happens. So that's basically it. There's not much in terms of a requirement. So, you know, I think you being in this industry is actually a really good pathway to go out and invest, and not invest, but to create also partnerships. You know, you can have partners buy into the security token, and also you can finance. Maybe you don't have to do a raise for your company's equity, but you can finance new operations. And that's basically what they were trying to do with utility tokens initially. But if you, let's say you want to expand to a new market and buy equipment there, you can, you know, we can raise funds with security tokens. Absolutely.
Yeah, it's
And then the
fascinating.
investors, and then you can actually ask for the partners, the local partners that you have in that country, to buy in, these partners to buy into the security. It's actually a much easier structure than having them buy into an actual SPV and hold an actual SPV. And for them, having this liquidity premium is fantastic.
Yeah. So you think that it's actually easier for them to buy into a tokenized SPV rather than go and fund a traditional go a traditional funding path through an SPV for what reasons again? Like what would those main reasons be? Like one, you mentioned the liquidity premium.
Yeah, also global raise, right? So
yeah.
Even now, when let's say you want to expand your mining business into Russia, and then you have a partner in Switzerland that wants to co-invest in that business with you. So you would probably create some sort of an SPV in the Cayman that's going to hold a company in Russia that was actually going to hold the business. So you're going to have a lot of lawyers here. In in any case, when you create this security token, and let's say you want to have not one investor. If you have one investor, you probably are not going to tokenize. But let's say that you have a lot of people who are interested in then you know, using this platform for mining, right? So mining other companies that are using this, you can ask them to buy in. And then, you know, they don't know anything about legal stuff and how to structure things and taxes and so on and so forth. So it's easier for them to buy securities. So, and also the securities are liquid. So as soon as they go up in value, they can sell. So they don't necessarily want to.
That's actually a very interesting point, particularly for miners, because offloading hardware and selling hardware can be a pain, can just be a huge pain, you know? So having that ability to sell that equity easily on a tradable platform through a security token is something that I think would be really useful for miners.
Yeah, for sure. I think the miners are definitely going to, you know, this is a new model also for anybody involved in mining. I mean, we can create something interesting.
Yeah.
I mean, I just brainstorming here. But
Yeah.
if we actually had a minute to sit down and think it through, imagine what we could come up with.
Yeah. Well, I've been thinking about this for like a little while now. Because also another thing that I'm not sure. I want to get your opinion on this and see if this is something that you think would actually work. If someone were to raise a mining fund that was specific to invest in different mining projects and then just tokenize the fund through some company that is, you know, created in the Caymans, and then you're able to do a global raise in a compliant way through that
Absolutely.
entity, that's something that's possible.
That is the best use case, actually, right? So you have miners anywhere, everywhere, right? And the only caveat here is that every jurisdiction has its own requirements, right? So with SolidBlock, we have partners almost anywhere that allow you to do compliant raise. If these investors are not accredited investors, a lot of them will be, because they probably, you know, have this mining business, right? They can use a business also, if not an individual. But if they're not accredited, we can still find a way to activate our crowdfunding partners and have them invest. So we'll find a way for them to invest. But it definitely, the fundraising costs money, right? So we're trying to minimize these expenses, but it's going to take us some time to create kind of this global efficient vehicle. So I say I would focus on 3 or 4 jurisdictions. Let's say not all 180 countries in the world, but let's say we'll focus on the EU, because that's a great, the EU is a great jurisdiction because there's a lot of people, a lot of countries, but yet passportable laws. It's perfect. Unfortunately, the UK came out, and it's so much uncertainty there. So we would look at the EU, maybe the United States, Mexico maybe, or maybe some country in South America, and Singapore, Hong Kong, let's say. China, unfortunately, it's illegal to raise money with security tokens in China.
Really? I did not know
Yes.
that.
Yes. So, but thankfully, most of the Chinese investors have their money somewhere in Singapore, Hong Kong. So, and have advised. Okay, this is nothing new, right? It's not only for the security token industry, and they have advisors, financial advisors that are acting on their behalf. So there's a loophole in that way. Yeah.
And how long are these is the full process where if someone goes and they say, I want to, for example, do that fund idea or do some other tokenization of some sort of asset, how long is that process on average from start to finish?
So you probably need around 2 months to create this PPM, private placement memorandum, which is really like a business plan. So there's a lot of thought put into it. Although if you come to me with a ready business plan, it will take us a week or two to convert it into a PPM. So then we'll have to do some technical onboarding and strategizing around where we're going to raise. And then depending on whether or not you have distribution partners, right? So if we need to also find networks of distribution partners, that's the most important thing. Like the key in every project is, of course, the marketing. If you have this community, so it's the same thing as with the ICO. If you have a community that trusts you and your ability to make money, they're going to jump on this opportunity. Then I would say STO is a fantastic tool for you, right? So if you do not have such community, it's not a panacea. It's not a magic pill. You can't, you're not going to be able to generate so much interest just by having an STO. So suppose that you have this network and a community. It'll take around 2 months to set up, maybe less. And then it will take another few months to raise, right? Depending on how connected you are.
Wow, that is very interesting. So this is something that if a company wants to do, they like the overall amount of time that it takes really isn't, that's almost like a normal fundraise, pretty much going from nothing to actually getting the capital in the door.
Yeah.
How much does it cost to get started with something like this? Is it high upfront costs, or is it something where after the raise is done, a portion of the capital raised is then distributed to the parties that helped with raising that capital? Like, where is the money, I guess, coming out?
So I recommend to raise at least $5 million. So the high upfront costs are generally concerning the legal part, right? Because we have to do the PPM, and legal is never cheap, and for good reason, right? Because you want to be compliant and you don't want to go to jail. So there is a cost to the legal. There are legal fees like $30,000 to $50,000, and the technical fees are fairly low, and another $10,000 to $20,000, let's say. And and then basically the rest is marketing. If you have your network set up and everything is great, then you don't need to necessarily pay the broker dealers, which also take upfront fees, and then you can go straight into distribution and raise without having to invest a lot of money, which is really the key, right? It's really the key. If you don't have such networks, then you're going to have to spend a lot more money on distribution.
Okay. Yeah. So
There's also compliance fees, but usually those are taken from, and most of them are taken from the raise itself. Every investor has to undergo KYC, AML, accreditation, so on. There's some escrow agency fees as well, another $10,000, $20,000. So we're looking at under $100,000 basically, if you're savvy with your network.
And then are there success fees that the broker dealers are taking after the capital comes in the door? So you'd want, like, assuming that you come to the table with everything, you can expect it under 100K. And then aside from that, whatever the success fee is.
Yeah. Well, if you're engaging the broker dealers to distribute, then yes, you're expecting to pay 5 to 7% in success fee. If you're engaging the broker dealer just to provide compliance, then you're not paying any success fee. You're just paying, some sort of a set fee per investor, right? So then you have companies like SolidBlock, where we also have a very small origination fee, which is, similar to a transaction fee that you would incur with like credit card or PayPal or something like that.
Yeah. And this next question, it really does end up depending on the quality of the companies that are going and trying to raise the capital. But if you were to just ballpark the success rate of companies that have attempted these raises and met that soft cap, so maybe not reaching the full amount, but made it to their soft cap and been able to keep the money and move forward with the project, what would you estimate that number is around?
So actually the thing is that we don't hear about failed projects so much in this industry yet, right? So most of the projects that I've seen have succeeded in raising $20 to $50 million. Those are like funds or real estate assets. I've seen some smaller raises, 3 to 5 million on different platforms. So I've seen a lot of successes here. And I'm sure there've been failures, but we haven't heard about them so much. And there was one public failure of a WeWork asset about a year ago, and it's been attributed to the fact that WeWork was going down in general. So they kind of pulled it at the last minute. So, but so far I haven't seen a lot of failed projects because companies are not willing to undergo through all of this trouble and invest so much money and so much effort into the legal process without having, thought through distribution partners, for example. So that's why I think that in this case, it's a very serious offering, serious companies. And I think just doing an STO is also signaling that the company and the venture is serious.
Yeah. So I guess you haven't seen many early stage companies attempt a security token or anything like that. These are companies that have their funding partners. If they wanted, could go raise the capital fairly easily through traditional routes, but for whatever reason, or I guess for all the reasons that we spoke about earlier, how security tokens can be really useful, they decided to go and try and do a security token offering.
No, absolutely. So like, for example, why haven't we done an STO for SolidBlock, for example, right? So we're raising our seed round right now in a traditional equity way. So you could ask, why are you not using your own product? And the answer is that, we think that the security token, first of all, should be backed by some sort of a real world asset. Either you're maybe a pharmaceutical company, or you hold some patents that are ready to go that you can maybe even sell to other people, right? Sellable IP, or commodities or equipment, right? All of that warrants security tokens. Like once SolidBlock reaches Series B or C or beyond, and we have contracts that you can quantify, relationships and let's say annual recurring revenue of some sizable amount, then we'll be ready to tokenize ourselves, right? So when clients come to 99% of the clients that come to us, we turn away because we don't think this is a good fit for them, and we don't want to have these failed projects, even if they have the money to do it.
Wow, that actually is very good to hear, because I mean, it would be easy for you guys to just take the extra clients, try and build it up, but you're trying to build, seems like, a reputation where when you get asked that question that I just asked you, you can say, yeah, they're all complete in this, at least the soft cap, like maybe more. I'm not sure what those exact stats are, but like industry wide. But if you're willing to turn away a lot of those clients that you don't think would be able to raise the capital, then I think that that's a smart long-term play.
Thank you. Yeah, we've learned a lot. We've learned a lot. I personally worked with ICOs actually, back in 2018 when I was enamored with the industry as well. But I did work with some really good ones that are still alive and working really hard and successful. So that's good news. And I worked with some that did reach the soft cap, didn't deliver. Very few. I don't think I've actually worked with somebody who tried and didn't reach a soft cap, which was maybe a good due diligence on my part. But I've seen that happen. I've seen that happen, and I've heard about that happen, and we all learn from that.
Yeah, I mean, it still kind of blows my mind how much money was raised during that time, and people keep pointing towards regulations. I think that this is the other side of it, where you want like accredited investor laws to protect the people who might just go and invest in these products and companies that are not going to succeed.
Yeah.
I guess my question is, do you think that the SEC should be doing anything else aside from adding those series level courses for accreditation? Or do you think that we've kind of reached a sweet spot? I guess if you could change any part of the regulation, would you, or is there anything that you would advise that they try and do?
That is a great question, and I haven't asked myself. What I try not to ask myself too many questions, because then I have way too many ideas. But we're actually a part of the organization called the Digital Chamber of Commerce, and they are the lobby group that goes and has weekly or daily, I don't know, talks with the regulators, working it out. But what I would do in general, I would actually utilize much more technology in trying to help people differentiate good projects with bad projects. I would enhance the capabilities of the SEC to provide information. I'll give you an example. I had a lot of people calling me trying to sell me products to invest in lately, right? So then what I usually do is I try to have a conversation with them. I don't hang up on them. I get their information, I get their company name and number, and ask them to email me all of their information and licenses. At that point, I have their name, and I Google it with the word scam next to it. And usually something comes out, but what comes out is not an SEC website. It becomes some sort of a forum where people were looking for whether or not this product is a scam. But they sound so credible. You're ready to send $5,000, $10,000, $20,000 to these people, right? So and they usually use a name of a company that actually exists, but they change it a little bit. Instead of a .com, they do .net, something like that, right? So then I tried reporting them to the SEC, which got me nowhere. Obviously they emailed back saying thank you, thank you, but we don't care. So you should do your own due diligence, and thank you very much. So there's really no. If I were them, I would create this reporting culture, use the use the knowledge of the system and actually educate people much more about financial products instead of limiting them point blank from investing. So there's many things that I would do from the technology standpoint. Definitely the move of the SEC to improve the accredited investor is a great one. They're increasing the crowdfunding threshold to 5 million. I think they should increase it higher. I think 20 million would be better. And also, I hope that they increase the threshold of how much an investor can put in these products. And also, they should maybe create an asset class that's in between the crowdfunding and the 506C. Actually, there is one, I should say. There is something that's called Reg A Plus exemption, where you can raise money from retail investors for up to $75 million. And also the threshold is not as low as crowdfunding for individual investor, but that actually is almost as, you almost have to write a full prospectus, and it's very close to being an IPO. So they should keep working on these exemptions and these standards. And I think they are doing a good job. They're doing a good job. Hopefully we'll see a lot of changes soon.
Yeah, I mean, it's just hard to wrap your head around all these different options. Like, been talking a lot about Reg D, but then is Reg A the IPO, and then Reg A plus is that exemption up to 75
No, they're
million?
both exemptions. There's a slight difference between
Oh
Reg
yeah,
A and
yeah,
Reg
yeah.
A plus. But yeah, they're not IPO. Like, actually IPO is a really interesting concept because with an IPO, you usually have an underwriter that comes and takes the risk, but they'll take a lot of money for that risk. And how do they make that money? They'll buy the risk at 75 cents on the dollar, and then when you do an IPO, you're selling it for high price, and then they're making all the difference. So they're making a lot of money from these investors coming in, even at the IPO, right? That's why, for example, Facebook, when it launched, or any company, it's at certain level. I think maybe it was like $60-$80 per share, and then it like went down to almost nothing, and that's why people are the initial valuation is a little high, and thankfully the product was good, so it went
It
up to
rebounded pretty
200
well.
plus. Yeah, it's doing pretty well, specifically that share. But that's the IPO, because there's a lot of intermediaries that are making a lot of money. It's a very cumbersome process, and the investors are not seeing, especially the LPs that invested money in the beginning, are not seeing those good returns. So a lot of companies are realizing that staying private is good, but they want liquidity. So I think that's why tokenization is really an amazing solution that's in between.
Yeah, it's pretty incredible just talking through all these concepts. If you were to predict what this industry is going to look like in the future, maybe if you want to give like one prediction that's a 3 to 5 year prediction, and then afterwards your 10-year prediction, what would you say the industry is going to look like at those different intervals in the future?
I think in 5 years, every single real estate fund is going to be liquid in one way or the other. And those that are not going to be liquid are going to stay behind. For private equity, it's tricky. I think only the companies that really have some tangible assets are gonna go for liquidity, because users are gonna quickly realize that it's hard to do trade if you can evaluate something concretely. In terms of funds and private equity funds and real estate funds, commodity funds, they all will be tokenized. I think maybe 50% of them will be tokenized in 5 years, and the majority in 10, unless there is a better technology and better way to do this that we invent, which I never want to discount.
That is just so
And
fascinating, that
yeah,
prediction. So
in
around
terms of
50%.
volume, though,
Yeah.
in terms of volume, there's $300 trillion worth of real estate right now in the world, and only 1% of that is liquid. So the opportunity is tremendous, right? And the liquid real estate is really the public REITs that you see on stock exchanges, right? So we have 99% that is not tokenized. Obviously, not everything is going to be tokenized. Some, village huts in Africa, or not even my apartment is probably not going to be tokenized unless I move into some sort of a big project. So let's say that even 20% is reasonable to expect for tokenization, and that already gives us $60 trillion. So I think that we're going to get to around a trillion in the next 5 years, and then sky's the limit. I hope within 10 years we'll get to full 5 or 10.
What is your favorite book?
So if we're talking about fiction, that would be A Catcher in the Rye, and that's kind of a place where, by J.D. Salinger, where like a young teenager realizes that the whole world is much crappier than he thought it would be. So I really don't know why I like that book. And then but business-wise, I really love Pitch Anything and Flip the Script by Oren Clough. I think any business person who's selling anything, their company or a product, should listen to that book. At least I do a lot of audiobooks, and then I buy
Audiobooks are
them.
great. Yeah.
Yeah.
I mean, because you can do it while doing so many other things. Like when you're driving, when you're just walking around, you can't like walk around. Well, I guess you technically could walk around while reading a book, but it would
Yeah,
look kind of silly.
I know. Yeah, exactly. That's exactly why I'm doing this, why I'm running errands. So yeah, so Oren Clough is fantastic. Definitely recommend.
Oren Clough.
Yes.
All right. Interesting. What do you think it is? You mentioned that you like business books. Like I actually am very similar in that regard. Whenever I'm listening to books or reading books, they're normally kind of surrounding business. So I'm wondering why you choose to listen to or read business books instead of fiction.
Um, a lot of fiction lately started to bore me. I feel like things are repeating themselves. I do have some favorite authors that I would read when I see them somewhere in the shop. And you know why? I actually think I have a better reason, because I don't fly anymore. So every time I would
You don't fly
fly,
anymore.
who's flying anywhere for the
Oh, you
last
mean
six
like now?
months?
Oh, okay, yeah, that makes
Yeah, I
sense.
mean, I don't remember what it was, back then, but for the last 6 months, usually I would fly twice a month, sorry. I would get on the plane and I would go by a bookshop, buy a book and read it on the plane. That doesn't happen anymore. So who has time or patience to sit down and read a book anymore, right? And
Yeah.
enjoy it. So so I really need, sometimes I just put my phone in airplane mode, pretend I'm on airplane just to get some work done. So that's I definitely miss those plain reading sessions. So then you're left with business books that you listen to, in your audiobook while you're running errands. But really, you want to improve in what you do. You want to learn. You want, and part of adult education, part of getting ahead, part of competition and ambition. And
Yeah.
also, there's so many smart people. I imagine myself sitting with Oren Clough, like him telling me his life story. So there's so many smart people that you want to learn from.
Yeah, and there are also just so many topics too. Like that's the other thing. I always feel like there's so much that I just don't know and there's so much information out there and there's only so much time. So like, oh,
Yeah.
well, if I have a little bit of time here and it's either just going to be listening to music or I could be listening to this podcast about energy or,
Oh
learning
yeah,
about blockchain
podcasts
or
are great.
crypto. Yeah.
Right. William, so what's your favorite, let's say, book or the recent book that you read,
Yeah, well,
listened?
there are a couple. I think that someone actually asked me this the other day, but it just depends what the topic is. So I think one that's really interesting regarding technology and the and potential future technologies was Homo Deus: A Brief History of Tomorrow. I think that
Oh,
that's
nice.
the exact name. Read it a little while ago, but that book was just fascinating. Uh, and kind of this would take it down a whole nother rabbit hole, but it kind of made me start thinking about the world in a different way. So rather than like to take a step back, if someone first told me the concept of like simulation theory, I would have thought that it was the most crazy sort of theory that's ever been invented. And it wouldn't make any sense for something like that to potentially be true. But then after reading this book, it kind of started to break things down more granular, in a more granular way, to the point where I was thinking, okay, well, there are a lot of similarities and the assumptions to a theory like that actually could make some sense. So that was one that really just changed my thinking. Definitely would
Nice. I'll check
recommend
it
to
out.
anyone out there. Yeah.
Yeah, I'll check it out. Thanks.
Yeah. So are you a big movie person too, or are you more so into the audiobooks?
Yeah, I don't watch movies so much. I watch documentaries. I love watching documentaries. Anything related to money, um, anything related to business and sports.
What was
Sports
a
document.
recent documentary that you watched related to money?
So
I've
I'm
seen a
so
couple
bad
on
with
those.
names, really bad with names. But there was a documentary about the doping scandal in Russia. It was called Icarus. Yeah.
Oh, that was recommended to me. I haven't seen it yet though.
Yeah. Oh my God, I love it so much. Well, I come from Ukraine originally, so I can definitely relate. But the most, I'm not gonna spoil it for you guys because I think everybody should watch it because it's just fascinating. What was super interesting to me is the main character and why and his psychological motivation of, coming forward and doing certain things. And it reminds me of certain politicians like staying in power to avoid jail, for example. So it's kind of like a similar type of rhetoric, and it's powerful coming out publicly with something to protect yourself as public is very interesting. So definitely, documentaries that are famous for a reason. So they're usually very good.
Yeah.
I like fiction movies that can be just advertising.
Yeah. That's fascinating. I have to go watch that. I'm the same way as you. I don't normally read like fiction books or anything like that, but anytime I watch a movie or just something on Netflix, it's always it's so entertaining. Like even like those documentaries and anything, I just am absorbed into it. I feel like when I start watching it, I could watch it for hours and hours and hours, which is why I normally try and avoid watching too much Netflix or too much TV, just because it just draws me in so quickly.
Yeah, for sure. No, I mean it's an escape mechanism, right? You want to do something. Your brain wants to switch off, and you have so much around you and so many activities and impulses that you want to switch off. It's normal.
Yeah. Do you do any meditation or anything like that to try and like calm down all the different thoughts that might come up?
I used to do a lot of meditation. um, I kind of recently got super busy. I do yoga, so like at the end of yoga, there's a little bit of meditation there. But thanks for reminding me. I need to every day. I say to myself, I need to get back to it. I need to get back to it. And there was all these series of like 30-day meditations, which was by Deepak Chopra, which I
Hmm.
really loved. And yeah, I highly recommend anybody to do that. It's kind of makes you more beyond the clarity. It just makes you more grateful and thankful, and it really works. Definitely. Do you meditate?
Yeah, I used to do it a lot, and then I stopped, and then I started getting back into it. And it's just every time I get back into it, I think, why did I ever stop doing it? And
I
then I
know.
always think back that it's because it does take time though. It is like getting into routine, like going to the gym. Like that's another one where once you are going every single day or meditating every single day, it's really easy to stick to it. But stop a couple of days and then it just keeps getting put off, and then it's not even part of the routine anymore to do it.
For sure. Yeah, definitely. It's all about routine. But as entrepreneurs, it's kind of difficult to just be left with your thoughts,
Yeah.
and disconnect. It's really difficult. For me, as a Jewish person, I have Saturday, and I'm not a deeply religious person, but make it a rule not to do any work for 24 hours. I mean, it doesn't include books, for example, but not any actual work. So it's really helpful. I work 24/7 almost, maybe 17, 18-hour days the rest of the week. But then one day it's just complete disconnect, which is great. And I wish I could learn to do this for half an hour a day. I think it would improve my life tremendously if I could carry the same, go for 18 hours and then take, or 16 hours and then take 1 hour and do nothing, meditate, sports. I do run, but then when you run, you still have the
Yeah.
have the thoughts going,
Yeah. Well, I think running, that's actually, so like this was way back, but like when I was in high school and we go on these long runs, I think that you actually do, especially if you're running by yourself, you get into that meditative sort of
Yeah,
state for a certain period of time. And even though the thoughts are still coming nonstop, it's almost like the same thing happens if you're just meditating sitting down. It's almost
true,
like
true.
recognizing all those thoughts and then just letting them, blow
Letting them
by with
go.
the wind. Yeah. But it
Well,
is.
I'm not so good at the running, so that's why I'm when I get better, I'm trying to actually train to do like this relay run with a running group on the mountains in about a month and a half.
Oh, wow.
So,
What's the distance that you're trying to go?
so each of us, so we're not professional. The professional is running around 16 kilometers, maybe 20 kilometers each. I think, and I don't know, I don't remember anymore how to convert that into miles. So we're gonna do around 6 to 10 kilometers, which is basically, maybe twice, right? If I do 2 parts, so that's 10 kilometers, about an hour. So two different parts.
Wow. And is that mostly uphill?
6 miles, I think, 5 miles. No, I mean, it's different. Yeah, it's going through nature, which is fun. And day and night, it's supposed to be like this amazing experience, right? So I've never done it, so it's the first time. I have a rule that I have to challenge myself, like at least once a week to do something that I'm afraid of, and like maybe like once a month to do something that I've never done. So this goes under the category of something I've never done. If you come to me and you're like, I don't know, do you want to go and learn skateboarding? And I'm like, yeah, because it would go under the category.
That's a great attitude. Like, I think that's so great. You go and you try all these new things, like once a week and then once a month. Wow.
Yeah. Try to. And that also forces me to say yes. So yeah, sometimes, right? Sometimes.
What are some of the crazy things that you've done that you might not have done because of like that attitude?
So I don't know, like last week there was an open mic in a bar. And so like I'm not a singer. Like I know how to do it, and I can't sing, but not in front of the audience. So I probably would have never gone up. But then like I said to myself, like, you're gonna regret it because this is an opportunity, so you have to take it. And so I took it, and it wasn't that horrible. Apparently, it was okay, but it was definitely frightening, right? So I also started doing improv because of that. And maybe a few years back, I was in an improv group, and I now when I go on stage all the time. I do these, I teach classes and I go to conferences. It wasn't always like that, and I sucked so much in the beginning, so bad, but I forced myself to go on stage over and over and over again, so thousands of times until it got better.
Yeah, definitely. Well, on that note, this has been an unbelievable amount of fun. Everything that you're doing with SolidBlock in the space, I think, is just incredible, really, really useful for everyone in this industry, and I'm sure that it's going to continue to grow and be a really successful company. So thanks again for coming on. Before signing off, is there any place online that everyone who's listening can connect with you?
Is there a place online where they cannot connect with me? They can, if you Google Yael Tamar, you'll see LinkedIn, Facebook, Instagram, TikTok, whatever you guys like to use. And I'll be happy to speak with anybody, get on a call, brainstorm. If you have ideas, if you have questions, I'll be happy to. And William, thank you so much for having me. It's really been fun for me as well. And I wish you lots of luck with whatever you guys are doing. You guys are doing great. The podcast is great. So keep doing the good work.
Thanks. Appreciate it. Thank you for listening to this episode of the Sazmining Podcast. Be sure to follow us on social media and YouTube for the latest updates and previews of upcoming episodes. Full episodes and transcripts can be found on sazmining.com every Thursday. If you want to hear us interview a particular guest on a future episode, please reach out to us at podcast@sazmining.com.